Today, crypto prices rebound from this week's sell-off. Terra halts its blockchain for a second time. And despite the recent volatility, VC firms are still looking to pour millions into quality crypto companies. Welcome to CNBC's Crypto World. I'm Kate Rooney. It was a rough week for crypto investors, but things are looking up today. Bitcoin prices have bounced back above the $30,000 level. By noon Eastern, other cryptocurrencies are rising as well. Ether was worth about $2,100, and Cardano among the best performers. It jumped about 18% since yesterday. Today's rally provided much-needed relief for a market that spent most of this week in free fall. Bitcoin is down 15%. In the past 7 days. For Ether, it's more like 20%. And this isn't the first time cryptocurrencies have crashed. Take a look at this chart showing Bitcoin's price since its start. It's filled with some very strong highs and some very deep lows. Volatility is just a part of crypto. That hasn't changed. What is different this time? The amount of people with skin in the game. Chainalysis found an 880% increase in crypto adoption last year, right as Bitcoin was reaching new highs. According to CoinShares, institutional investors poured $9.3 billion into crypto funds last year. All of those new holders are now paying close attention to the price of Bitcoin and others. They're also paying attention to the fallout from the Terra USD stablecoin. Here's the latest on that story. We told you yesterday that validators halted the Terra blockchain as the Luna token fell to near zero. It restarted soon after that. Then late last night, they did it again. The blockchain halted for a second time as the Luna token dropped to 0.8 of a cent. 9 hours later, the network spun up once more. Terraform Labs said the halt was necessary to, quote, reconstitute the network. As of noon Eastern, Luna's price sat at a 7,000th of a cent. Next, Sam Bankman-Fried just made a major investment in Robinhood. The CEO of FTX bought a 7.6% stake in the company, saying in an SEC filing that he saw it as an attractive investment, but that he didn't have any intentions of influencing control of the company. Robinhood stock surged more than 20% on that news. Finally, Elon Musk has paused his Twitter takeover. The Tesla CEO announced on Twitter that the deal was on hold until he learned how many fake accounts are on that platform. He followed up in a tweet by saying that he's still committed to the deal. If he were to back out, he'd be required to pay a $1 billion fee. Elon Musk previously said that verifying Twitter users and cutting down on spam is high on his list of priorities, and some have speculated Web3 technologies, or crypto, could be a way to do just that. Okay, as crypto markets have fallen in recent weeks, venture capital firms have changed their investment strategies. For our main story, I spoke to Michael Gronager. He's CEO of Chainalysis, about that company's own funding round and how venture capitalists are now focusing on more quality investments. Let's start with the news of the day. So, big funding round for Chainalysis. Talk about that, what you're announcing today, and the new valuation.
Yeah, so we raised $170 million. Post valuation after that is $8.6 billion. It's led by GIC, who is a sovereign wealth fund out of Singapore, and the proceeds of that funding round and the reason to raise money right now is mainly like international expansion, but also growing our products as we see more and more use cases for our data.
And talk about the product that Chainalysis offers. You guys are able to look at some of the activity on different blockchains. Walk us through what Chainalysis does here.
Yeah, so when I looked I've been in the crypto space for 10, 11 years or so. And when I looked at blockchain in the early days, I really saw that this is a piece of finance that probably have a promise to be the most transparent financial system that humanity ever built. And then you look at that and you look at transactions on a blockchain and they're super complicated. So could I somehow make that more accessible for people? That was the real question. Chainalysis products and data strive towards that. Our data is around being able to understand who are the different services, who are the players in a blockchain, what is happening in crypto in general, and then build products around that where you can run investigations, follow the money, you can do business intelligence, you can do compliance and monitor all transactions on your platform that way.
Got it. And that is a unique thing about cryptocurrencies. And we see in our reporting as well, you can follow certain big transactions. What are some of the examples of the trends that you're seeing? I know you've done some research around sanctions and the possibility for evading sanctions, illicit finance. What have you seen, and what's some of the data that stands out from the past couple of years?
So I would say one of the major overlying trend is that criminal abuse of crypto is going down, at least in a relative way. So last year, crypto grew like around 5x in terms of usage, and at the same time, we only saw a moderate growth in criminal activity around 80% or so. So it means that it's not seen as the place where you can launder funds. So like clearly see a decline there. Right now, our assessment is that around 0.15% of transactions could be related to money laundering or other kinds of crime, which is a very low number and down from 1% the year before and further up in the past there. So that's a big trend. I would say what we see as well is we also monitor flow of funds in general and try to monitor what is happening in the industry today. And some of the things we typically see is like, what are the sell-ups that happens in crypto? Is it retail investors that needs liquidity because they are afraid of the current conditions in the world? Or is it like big whales that say like crypto is, I'm done with that. So they're exiting in big portions. And we can monitor that as well on the blockchain and understand what is the current trends in the market.
I do want to pivot to the funding environment. We've seen what's happened in public markets with cryptocurrencies and equities. Was it difficult to go out in this environment and raise cash? And what are you seeing on the private side of things as you talk to some of your venture backers?
So I think if you go back last year, every company was a good company and everyone could raise money. And there was like not really a lot of scrutiny in terms of investments. So everyone could basically raise funds. If you look at what happens in a market like it is right now, then investors stop and say, what happened last year? Who did we back? What did we do? And then they look for the companies that they can see like a true long-term value and like where they are unique companies in that sense. And I would say, yes, of course, when we talk to investors right now, the scrutiny is harder. We see more due diligence being done. The numbers are being turned many times, but also the conclusion were in the end that Chainalysis is like one of the unique companies that they definitely wanted to support. So it was possible. I also have to be honest and say like, of course, it was last year you could raise money over a dinner and then it was done and you got a term sheet after that. And it's more of a process this year.
Got it. So not as easy as it has been to raise VC money?
I would say yes. It's not as easy as it has been, for sure.
Got it. Got it. And as far as what you're seeing work, so Chainalysis is a pretty unique business here. Is there a flight to sort of the infrastructure plays here? Or what have you seen as far as what's getting that quality investment and what some of the bigger investors are drawn to right now in this market?
So I think what is unique about Chainalysis today is that we're the biggest enterprise SaaS company in the crypto space. We are all about recurring revenue, so standard SaaS model with recurring revenue and so on. It's a very well understood business model. It's very well understood how it's going to be valued on a long-term basis and so on. So it's very, very like comforting as an investor to enter a business like that. And that should be seen as opposed to a lot of crypto where you see a very interesting new business model being played out, but the risk appetite and I would say the adventurism among investors is clearly something that like passes by once the market goes off risk.
I want to ask you about one cryptocurrency in particular. We've talked a lot about Terra USD and Luna and that whole ecosystem. Anything you're seeing from Chainalysis that is informative of kind of how this happened or some of the trends behind that?
So it's clearly one of the things that's important to mention here is that there's two kind of stable coins. One of them are algorithmic and another one is backed by actual dollars. And what is backed by actual dollars like USDC or USDT, they're backed by physical dollars somewhere, probably in treasuries or held on a bank account. They are stable for that reason, and that's a very strong, I would say, currency to use online. If you look at algorithmic stablecoins, they are different in many ways, and the difference there is that they're basically backed by a structure where you offer an interest rate, and that encourages people to put money into it, and that can maintain a price. At some point, if there's a run against an algorithmic stablecoin, there will be a point where it runs out of funds. They need to like mimic that with other currencies. We saw that experiment play out last week. we saw that the money basically was in the end up being gone, and they couldn't withstand the pressure. It's something, an attack against against Luna was happening. That was clear. Someone probably planned it out and did this on purpose, also for the benefit of that. And it's something that we are of course looking into and trying to figure out what actually went on here. All of the data is stored forever, so it's something that there's time to look into and understand who was behind. Was there anything illegal going on? Maybe not. And is it something that we want to protect against going forward?
Okay, that's all for this week, but head over to CNBC.com for more coverage on this week's sell-off. We'll be back again on Monday, and we'll see you then.